Hello everyone, and welcome to the first episode of the Divity Radio Show, which is actually just a podcast, but since everybody's doing podcasts these days, we decided to bring back the good old radio show. In this episode, we have got two topics lined up. First, we will dive into the current market downturn of August. We will discuss how one should behave in such scenarios and how to actually take advantage of the situation, especially if you're just a regular everyday investor like me. Our second topic is a bit more technical. We are talking about exchanging currencies on interactive brokers. They launched a new feature in 2024 and I accidentally used it, so we will break that down as well. Alright, let's start what to do during a market downturn. So, picture this. I'm on holiday at the start of August and on the 8th, I'm heading back home from Croatia. I get this notification on my phone. I count down more than 819.37 cents with a bunch of reference numbers. My first thought? Scam alert. Then I remember I had turned on the trading assistant notifications on IB, so my next thought is, oh no, someone stolen my money. But I check my account and sure enough, it's down by a few hundred francs. I start Googling to see what's going on and I come across a bunch of news articles. Now, let me clarify something. An 8% drop in the global stock market over a couple of days, by my standards, that's not a huge deal. But hey, if everyone says that it is, well, who am I to argue? Oh, and let me add, I actually saw my account decline by around 12% because the Swiss franc got stronger during this downturn. Most of my investments are in foreign currencies and my ETFs are not hedged, so yeah, not exactly a great day. But after spending about 5 minutes trying to figure out what happened, I put my phone away and went back to enjoying the ride home. By the way, my sister was driving, so I don't use my phone while driving. And that's pretty much all I know about this downturn. I mean, I work every day. I don't have much time to keep up with the market news. I'd rather spend my time studying investments actually, but since it was impossible to avoid seeing videos about the incoming recession on my YouTube homepage, I watched a few. Apparently it could be due to a bunch of factors, something about Japan. Honestly, it's not like I care much. So, we left off with the question, why don't I care that much? Well, let's start with how to behave in such a scenario, beginning with our investor statement. If you're not familiar with what that is, or you don't have one, it's okay, it's no problem. An investor statement is just a simple, brief document that explains how you're going to manage your investments. It includes your goals, asset allocation, investing frequency, general investments amounts, what you expect from your investments, and importantly, what to do when a downturn occurs. You could also add some psychological aspects to it, like how you think you will feel if something happens, whether it's a rally or a downturn, and what you can do to keep your emotions in check. Your investor statement should ideally be written down, in a written document, though it could also be mental or in an Excel spreadsheet with bullet points. I don't recommend just keeping it in your head because then you're more likely to change it whenever you feel like it. But hey, that's my method, along with some support from my Excel sheet, so who am I to judge? I know, I'm doing something I don't recommend, but I'm too lazy to write it all down. So, what does my investor statement tell me to do? Well, almost nothing. Just look at my asset allocation and rebalance if needed. Besides following your investor statement, another key thing is to avoid getting too nervous. That goes for both sides of the spectrum, whether you are anxious to sell everything or you are eager to buy more and more. If your investor statement tells you to sell or buy when the market drops by 8% and you have backtested the strategy, then by all means go for it, but if not, then don't. One practical way to avoid temptation? Just don't look at the numbers. I know it's hard, but seriously, if you know checking your broker will trigger strong emotions, just don't do it. To help you, you can delete the app on your phone and avoid using automatic password input to enter your broker and activate double security. That way it will take you like 5 minutes to get into your account and you will certainly get bored. Another piece of advice is to limit how much news you consume. I know it's tempting to click on the video with the dramatic all red thumbnail and the plummeting chart, but the more you watch, the more you might start to perceive the situation as worse or better than it actually is. So, unless you are genuinely passionate about investment news and you often keep up with it, just don't read it. You don't need to trade based on news. I'm not saying keep yourself completely in the dark, but it's when you spend hours trying to understand every detail that you start finding correlations, trying to trade on them, and more often than not, end up getting burned. So, does that mean I just do nothing? Well, no. First of all, I said to follow your plan. If your plan says to do nothing, then do nothing. My plan, for example, says I should rebalance if needed and ideally invest every 3 months, but at least twice a year. Now, for various reasons, I ended up with quite a bit of cash this year. Part of it was for buying a motorcycle and I saved more than expected. Another part was due to miscalculating my taxes, so I ended up with more savings than I needed. But yeah, as I mentioned in my financial updates on YouTube, I hadn't yet invested any of this extra cash. So I figured this market downturn could be a good opportunity. Just to clarify, these were savings I was going to invest anyways, not money I was keeping aside in hopes for a market downturn, nor money that I needed. I just happened to have around 12,000 francs to free to invest, so I decided to use this downturn as my entry point. I initially planned to invest it later in the month when I do my usual Excel spreadsheet analysis, but since the opportunity arose, I went ahead and did it. So, one way you can use a market downturn is as an entry point for money you were already planning to invest. Maybe you were going to invest it a month later, but since the market dropped by 10% or so, you decide to do it now. Of course, you don't know if the market will keep going down, but since you can predict it anyways, why not investing it now? Now, let's talk about interactive brokers and its two ways to exchange currencies. The other day I was investing some money because, as I mentioned before, my asset allocation required it since I had too much cash. So I exchanged my francs for dollars and bought VT, the ETF. Then I checked my orders and trades section and I saw 3 or 4 exchanges being made. I was a bit shocked because I had already exchanged francs into dollars to buy VT, so why was it also exchanging euros, pounds and more francs into dollars? Then I remembered that IB needs about 2 days to settle the money you exchange before you can use it to buy stocks. But what really surprised me was that I didn't pay any commission for these extra automatic exchanges IB did for me. So what happened? Well, Interactive Brokers has 2 ways to exchange money. The first is the standard currency exchange. You pay 0.2 basis points, which is 0.002% or $2 every 100,000 exchanged, with a minimum fee of $2. That means if you exchange 100, 1,000, 10,000 francs, euros or dollars, you will pay $2 or the equivalent in your base currency. Now, be careful because this commission is always charged in your account's base currency. For example, I always need to have francs available to pay these fees, even if I'm exchanging euros for pounds, because the commission is charged in francs for me. The second method is to keep your francs or any currencies you have and buy VT without having the necessary US dollars balance. Interactive brokers will automatically convert your francs, or again, any other currencies you have, into dollars or any other currencies you want to trade. This automatic exchange doesn't have a direct fee like the first method, but they do worsen the exchange rate by 0.03%. This isn't news to me actually. I knew IB had this feature, but I thought they would charge $2 fee on top of the 0.03%. After accidentally using it, I checked IB's commission webpage and confirmed that there is no additional fee, which is also reflected into my trades. So, practically speaking, which method should I use? If you are exchanging less than 6,000 francs, dollars, euros or whatever, just go with the automatic exchange to only pay 0.03%. If you are exchanging more than 6,000, you are probably better off with the manual exchange since you will only pay $2. And that's a wrap up. Thank you so much for staying with me throughout today's episode. I wish you all a fantastic start of the week and stay tuned for the next episode of the Divity Radio Show. Thank you so much.